Hello, and welcome to another day of TA the Degen way. Well, on tonight's episode, I just wanted to hop on and take a look at Injective, or INJ. Try not to be too long. I've been over the chart 2-3 times because somebody doesn't know how to turn the microphone on. That person's me. So I've already been over this twice. But first, I want to point out our Injective macro outlook from previously, and what were we looking at back in September of last year. Initially we were interested in this. Why? Look at how far it bounced off of the bear market low. 730%. It's a 7x. When you find these things that people support more than other stuff, this is the stuff that has people's attention. This is the stuff that's going to move, So what happened? We were looking for that measured move. We were looking for price came up. Here's our A, here's our B, and we were looking for our C move, which also aligned. We had this swing low to swing high. We had to let it sit, simmer for quite a while, and kind of forgot about it, just like I've been kind of doing for the last month or so here. If you press the play button, well, where did we end up? We ended up here. We're in this business again. Reaccumulation, But then comes the magical question, which is what we're here for, is how low will this go? We reached our target. We didn't reach this reverse head and shoulders target, which is on there. That's not the most clearest thing in the world, but, our cleanest. But it's there. Let's hop right into the chart here. I've got the chart marked up already because I've done this twice. And what do we got on here? You can see I've got my regular old octave scale. If you're not familiar with the octave method, I do have a video. Just hop on the channel. If you like this kind of TA, that kind of tends to be accurate, for reasons that I discuss in our Discord very frequently, which is free, by the way. It's just there to be help to you. But if you like this kind of content or this kind of TA, if it's a help to you, be a help to us, and hit that like button and press the subscribe button. And support our efforts to help be a blessing to you. But here's our octave scale. We're looking at this first range. Here is the bear market low. Here's this first impulse off of it. We could have taken this one. But this one lines up better. What do you got? Support, resistance. Here it's respected. Here it's respected. Here, and what do we have at our 0.625 level? Our 5 deviations. We think of this as the new normal. This is the new average. This is, let's consider this to be 0. And price deviated from that 0 mark. If we thought about this according to kind of bell curve philosophy, here's your center. How far should we be deviating from this? 1, 2, 3. Anything past 3 gets pretty crazy. And what happened at 3 deviations? Reaccumulation. What happened at 5 deviations? Reaccumulation. But, we might need to come down a little farther. That's the magical question. We've got this linear trend here. This is a good indication of what's going on. You can think of this as, part of this bigger wave here. It's not a very good circle, but we broke it here, but what happened? We wicked back above, and then we pulled back to it. And if we look at our oscillator, we've got mixed signals. Now, my idea or hypothesis, theory, or whatever you want to call it, this here, look at this oscillator. This is the Fu Manchu. It's a slightly customized version, but mostly just the colors and a little bit of smoothing in the money flow there. But these are just averages, these blue waves. It's just showing us what's going on in the price action. It's showing us the same thing that, I mean, I'm showing you right here. It's attenuation of a wave. It's lost momentum. You know, each push-up has gotten smaller and they're taking longer. This, you know, is the life cycle of a wave. It loses momentum, and when time and price are square, you know, you have your circle and your square. When these two are square, it the trend changes. Either it needs to range and accumulate, and you'll get a rip out the top of it, just like here. You know, it was square, sure, but it just trended along and it continued on. You know, look at this first push up off the bottom. Same thing. Time and price were square, it pulled back, and what did it do? It retraced the whole thing. And then we started this bigger wave. And if we look at this is a regular old bell curve standard distribution. You know, came all the way back down. It's equal on both sides. You know, here's where most of your action is. Typically what you get is skewed distribution. Where now, I mean, yes, this has came up this far, but I mean, is it going to come all the way down here? No, I mean, it certainly can, but usually what you get is it's skewed. So just take that same thing and just turn it on its side, you know. I mean, if you make it all the way down here, chances of getting a major bounce are about 100%, you know. There's a strong likelihood from somewhere right here, and there's a strong likelihood from somewhere right here, but I think the bounce that we're going to see right here is I do think that we are going to see more of this trend retrace. Doesn't mean it will, and we can just continue, but to me, I see this first move is over, second move is over. You know, maybe we get a third right here. I'm open to that. What do you got? Each move is getting smaller and smaller and smaller, you know, until this here is exhausted. And that's what you're looking at with a wave is, you know, you're looking for exhaustion, for that reversal point. It's not just exhaustion, it's exhaustion at a key level where a reversal would be likely. You know, I mean, why did we stop here? Well, we're at this key price level of 0.625 on that octave scale. I mean, that is probably the most reoccurring level, period. But here we got this bullish signal. We broke below this trend. We've reclaimed it. We've came back down. And I mean, I see a long trade here, you know. And how far did the market come down? I did a video earlier today on CFX or Conflux. They both came down about the same. And many of these other ones that if you check back over the next couple of days, I'm going to be looking at a bunch of these. Well, why? Because I'm expecting market behavior and I want to, you know, stay on top of these. I mean, I'm not interested in this business. I mean, this is garbage. You know, this is some good business right here. This is bad business. And you'll notice that they both last about the same amount of time. You know, look at that uptrend. Then you got that much sideways garbage. And then you'll have probably about an equal amount of downward action, which is what you got right here, you know. But it came down 65%. You can only deviate so far from here, you know. We are probably, you know, here's the first retrace right there. So there's one, there's two, you know, you're at about 3 deviations right there. You're at this last support resistance flip. Should see some kind of a move upward. Look at these waves, you know, this is, you should be expecting this to come down about right here. Look at that money flow. You got some bullish divergence on that money flow. No bullish divergence on your wave trend, but you have bullish divergence on that money flow. Here you got a higher low. If this bounces. I think it will. Look at this VWAP curling up. Because what's happened so far, we put in this high on this bigger move, and we're either going to put in a last smaller wave right here, which that distribution up there is nothing more than taking this swing low to swing high. Gotta flip our tool over. You know, we're looking for that 1.5 expansion area, which is also about the middle of this next run on the octave scale. So, I mean, that's why, you know, I'm looking at that potential third push up there, you know, before a larger retrace. Either we're getting a larger retrace here, or we'll see a third push up and then a larger retrace. I mean, we came down 65% from the high price, but we certainly didn't retrace 65% of this trend. And we've given some of this back. I mean, we're giving a lot of this back. I mean, this push up here. And we're probably going to give back 38.2 to 50% of this thing at some point in time. It, you know, I mean, is that not what happens? Of course it is. Look at every chart around. It, you know, there's a new normal made somewhere. Here it just happens to be here, you know. Double bottom, full cycle, confirmed, you know, boom. Here's this move. And, you know, I see this big, large, long move. This big, large move, not as big, not as long as this one. You know, and then now we have some bullish signals. What if we get this one right here? And this is our entire move. And then we need to retrace about 50% of that and continue. That or else we're going to lose this range right here. But regardless, I see a push up. I see a push up into this red distribution box around $80, $90. Or another option is we don't put in this third little wave here. And we're coming down and retracing, you know, a portion of this trend now. I still think we're going to see a push up because here we got this high, and yes, we put in a lower high here as part of this one trend. Have we pivoted back up for a lower high? We have not. I mean, why can't we do that with these bullish signals? You know, because if you come out and look at your weekly on that oscillator, it, which this I did not do the first time I looked at this. Yeah, I mean, she maxed out. And look at these waves leading up to it. Why would you suspect this to be a top and this to not just ride the top and price keep ripping, which you could do. That does happen a lot. Some of your biggest rises in the market is when your RSIs are up at 80, 90, you know, mega overbought. You know, you should be expecting a top right in about here. So, I mean, these daily bullish signals, you know, on like the daily, the 4 hour and whatnot, could get absorbed with something else. Let's go back to the daily. Am I covering the... There we go. I wonder. Let's go back to that daily. Alright. We're going to get rid of all this fib business here so you can see what's going on. We came down 65%. You know, let's look at our current range here. These are equal sizes because things tend to exist proportionally. It's just the way it is. Here's the upper range. Here's the lower range right there. Now, if we don't consider this push up out of it and then a rejection and came back into it, we consider this strip of highs here, and then this to be swing failure. Come on down, you know, you got the same thing down here. But regardless, here's the middle of your range right here. We came up and tested it. Now we pull back to this trend, and we're getting some bullish signals. So why couldn't we just get an ABC here? And, you know, take this low right there. A, B, there's our pullback, and then a bounce. And what level does it bring us up to? You know, your pivot lower high. Burn up them bullish signals, create a new average, which is lower than this, which allows us to deviate down for a lower low. Maybe you get a 1, 2, 3, 4, 5. You know, I mean, how low should we be looking for this to eventually go? I mean, you know, maybe, I mean, June 20th seems to be one of those dates. So what am I looking at? I'm looking at this, I'm looking at a bounce here. You know, I mean, it looks bullish, you know. It came down 65%, pulling back for hopefully a higher low, you know. A lot of stuff looks bullish, but is it going to carry us up here? I mean, that's the real question. I don't know, you know. What we need to watch is this push up. You need to watch this trend as if we do push up here, you know, and look for where this exhausts. Look for your curling trend, your loss of momentum. You know, if it squares out here and is dead in the water, you know, I mean, you're probably going to see this. I mean, if it comes up and it's just rip-roaring and it gets up here, I mean, you know, maybe you see something like this. Just got to watch this trend that forms. You know, we could just break down here and reject and come down just the same, but we got all these bullish signals. Probably won't get wasted. We have no lower high in a pivot, you know, trend form. We have this lower high, but it's just part of this trend. We haven't trended back up to confirm that, you know, it just needs to come down for more juice. June 20th is kind of one of those dates right at the beginning of summer, you know, where usually this little lull that comes right in this kind of time period is usually over, and that's kind of about when we rip again. Maybe we come on down, but how low should we be looking at coming on down? Let's say that we put in that lower high and we don't put in this little blip here. Well, then we need to be looking at that ABC to the downside. Let's look at our entire push up here, and let's say that it is over. Instead of getting, you know, here's our one here, instead of getting this third wave here, let's say that we already have 1, 2, 3. I mean, this here looks like 1, 2 to me, and it looks like a third little push up would just fit that chart so well. And it'd be nice, you know, pump up, pull back a little bit, and rip again. Get everybody super bullish again, chop around. But at some point, we got to retrace some of this trend. People got to take profit. We got to come down and get a better deal, you know. So let's go from swing low to swing high. Let's flip the numbers over so they're going down. How far should we be looking at coming down? Let's say the high is in, pivot low is obviously in. Let's say pivot high is in, and we're just coming up for a lower high and then coming down farther. You know, your ABC target, you know, brings you down to about your 382. And lowest, I mean, I'd be looking at, you know, this 50% mark. You know, which is our last. Here's our major reaccumulation. You know, this 382 would be a bullish pullback. You don't even break bullish market structure on this thing until you get down to like $5-6. You know, down here is the last unbroken low, or you could say here, or even right here. Let's say this low right here, it is $15. Let's say we come all the way down to $15. You know, that's a very strong pullback, and you know, we could range on. I mean, June 20th, looking at this chart, look at this whole push up. I mean, June 20th is where? Right there. You know, it's not even that far away. So, I mean, that's what I'm looking at on INJ. I'm looking at the potential for this last smaller little leg up, which is not very small. I see two moves. You know, we come up to these lower highs here. You know, that's still a 60%, 70% move. If we come up here, we're talking about, you know, 200, 250%, 225% move to the upside. So check back next couple days. We'll be going over a bunch of these. I did CFX earlier. This is Injective. We got like Optimism is another good one. Fetch, F-E-T, A-G-I-X. Those are all good ones. Dogecoin. Take a look at Pepe. Just some of the bigger kind of things that people are looking at. CRV, Curve, you know. The Curve's been hammered. You know, looks cheap. We could always look at Zen, which, you know, could be the mistake of the millennia. I don't think so. I'm bullish on Zen. Kind of have to be. But she hasn't shown any serious promising returns since that first bull run, which I'm glad I sold. But price is much lower. You know. But, you know, if we get this third little push up here, man, some of those bottom of the barrel altcoins, they sure might rip. But if you like this kind of content, like, share, subscribe. Come on over to the Discord. There's a link in the description. But until next time, trade well.